The one thing that's holding back the housing market right now is really low interest rates. And I'm not talking about interest rates where they are today. I'm talking about the interest rates that we saw during the COVID years, where we saw 2 and 3%. All of those homeowners that currently have those rates do not want to sell their homes. Therefore, we have a lack of inventory that's on the market right now, which is propping up prices yet again. If you've been thinking about buying a house this year, you need to watch this video to the very end, because this is a problem that we're starting to see all over again, and it's making home affordability even tougher. So you need to have a better strategy as to how you're going to get into your home, so that way you make the right decision and you choose the best mortgage for you. Now, we have to look at the history of the 30-year mortgage rate. If you go back the last 50 years, interest rates averaged about 7.5%. Now, they started to dip down over the years, and of course, during the 80s, we saw the peak hit 17, 18% interest rates, and those were just wild times. But ever since then, interest rates have gradually gotten lower and lower over the years. Interest rates started to improve after the 80s, and they started to head down into single-digit territory. When I bought my first home in 2010, I believe, my interest rate on my house was an interest-only mortgage, and I think my interest rate was about 7.5% during that time. That was the best rate you could get. But as we headed into COVID, the government decided to cut interest rates to an extremely low level. This gave us unprecedented interest rates that we've never saw. You can actually hit the description below. There's a link to the history of the interest rates from Freddie Mac that they've been keeping track since 1971. There's even a spreadsheet that you can go and look for yourself where interest rates were over the last 50 years. We've never saw 2 and 3% interest rates. The market went absolutely bananas. Now, for all of us that was in the industry, it was a great time. We made a lot of money, helped a lot of families get into properties, and helped a lot of people refinance, lower their debt, take out some cash. There were transactions that were literally falling into your lap every single day, whether you were a loan officer or a real estate agent. But here's the problem. The market got so hot that there wasn't even enough inventory to meet the demand. So then the market heated up even more. Buyers were selling their properties, and because you could work from home, they were relocating to places all over the country, Las Vegas being one of the top destinations because Nevada has no state income tax. So a lot of Californians and people from New York, a lot of the cold weather cities, they look to buy homes in the warmer climates. So our markets went even crazier back then. People were paying $20, $30, $50, $100, couple $100,000 above the list price of the house. And they could do that because they were selling their home for top dollar. And because interest rates were so cheap, more buyers were in the marketplace. They could afford homes that they probably couldn't normally traditionally afford because of their debt to income ratios. But when rates went from 4% down to 2%, now the buyer pool just opened up that much more. Now, in the heat of the moment, everybody was saying, buy, buy, buy. You should buy now because this is a great time to buy. But then the argument back then, it was, well, I don't want to overpay for a house, or I don't want to come in with more than what the house is worth. And there was a lot of buyers that got frustrated because you didn't have a lot of cash saved up. You were strapped for cash. You couldn't pay your own closing costs. And sellers weren't willing to negotiate with you back in the day because guess what? Behind you, there was another 30 offers on their house and they could be as greedy as they wanted to. But again, no one thought about the repercussions of what was taking place. So the more that this continued to happen month over month, values went up and up and up. People continued to buy houses, but a lot of you buyers got so frustrated, you decided to quit and wait. But look at where the market is today. Interest rates have more than doubled. Home prices have continuously gone up. In fact, after several months of almost a steady decline or even a slight pause in values that we've seen in some markets across the country, we're starting to see multiple offer situations come back. I recently had a client who was making an offer on a house in Florida, 61 offers on one house. We had a client here in Las Vegas buying a property, 30 offers on a house. I even had another client that was ready to write an offer, and the listing agent decided to send me a video of 15 people outside of the house all plotting and trying to figure out, how are we going to make an offer on this? What should we do? Literally, people are starting to line up again to buy property. The interest rates did not slow anything down, just like everyone thought it was going to. Now, I'm not gonna lie, the business did slow down for a lot of people out there. And you've even seen some mortgage lenders go out of business because of it. But the underlying problem to all of this is that the low interest rates that we saw during the COVID years has put everybody into this tailspin that now you as a buyer, you want 2 and 3% interest rates. You want to look at a $500,000 house and pay $2,500 a month instead of paying $4,000 a month. There's all these things that you want but no longer exist. Now, all these home buyers have no real reason to sell. So it's constricting inventory even more. And we've had a supply issue for the last several years. It's one of the biggest issues in the housing market right now, is that there's not enough homes to fulfill the demand for the amount of buyers that are out there in the marketplace. The last time I looked at a report, I think there was about 560,000 available homes for sale in the entire country. So if you just did simple math and divided that by 50, you've got a little over 11,000 homes available in every market if you broke it down and divided it equally. That's how low we are with inventory right now. So everyone that would have normally traditionally have sold their house probably by now, because we're in the spring buying season, they don't want to sell. Because I don't want to sell my house if I have a 2.5% interest rate to take on a 7% interest rate today. So they're going to sit on that house. They're not going to do anything with it. And that is another home that should have hit the market that won't hit the market. And to make matters worse, Wall Street got their greedy hands into the residential real estate market as well. Blackstone and some of these other companies started up buying tens of thousands of single family properties all across the country. They were paying above value. They were just buying properties left and right, because why? They were borrowing money that was so cheap, it didn't matter to them, and they could make all the mistakes in the world and it would still pan out for them. You've had other companies like Zillow even come out with some of their Zillow offers, and that didn't necessarily work out too well, but everybody was literally trying to gobble up more single family homes, which again makes it tougher for you on the sidelines, because how can you compete against a Wall Street firm or a big investor that's got tens of millions of dollars and you literally got maybe $10,000 in the bank and you're trying to buy your first house? This is why we've been continuously saying this on my channel. You should look at the right game plan to get your foot in the door. If you can afford a house today, you should be looking at strategies on how to make that happen. Not because some mortgage guy is trying to get you to buy a house so I can make a commission. That's the last thing I'd want you to do. I want this to be a benefit to you. I feel like these big corporations are trying to squeeze us out from owning more properties, whether it's a retail investor like myself, or you're trying to buy your first home. I still believe in home ownership, and I think that more people should have the opportunity to become homeowners. But when you're sitting on a 2% interest rate and rates are at 7%, unless you absolutely have to sell your house, it makes it really, really difficult for you to even contemplate doing that. Now, I know a lot of people on social media came out with the whole date the rate, marry the house slogan that they came out with, but you still have to understand that you can still refinance in the future, but you have to qualify for that refinance. So even though you might not like 7%, how long do you have to sit on that 7% interest rate? Is it a year? Is it 6 months? Is it maybe longer than that, 2 or 3 years? We don't know. Everybody's speculating right now as to where interest rates are gonna go. We're all hoping they're gonna get better. In fact, a lot of industry publications are saying that interest rates will be somewhere around to the mid to high 5s towards the end of 2023. Whether that happens or not, no one knows. We're all hoping and praying. In fact, there was a few mortgage experts that were predicting in May that rates were going to be back in the 5s, and we've obviously surpassed that time frame, and it never happened. There's so much data out there, there's so much information, everyone's got an opinion, and like I've said before, the only way to make a decision is to know how you fare in the market. And by doing that, you need to do a pre-approval, talk to a lender, talk to a real estate agent so you understand the dynamics of the market and you're not just reading some sort of news online or watching some guy's YouTube video. Talk to a real estate agent who can give you actual data in the marketplace. And what you really want to ask them is, how many months of supply is on the market right now? Any good real estate agent can pull that information for you. Basically, they're going to look at the amount of homes that are up for sale and how many homes sell every single month. That will then give them the months of supply of homes that are on the market. In most markets, we're seeing anywhere from 2, 3, maybe even 4 months worth of inventory. So there's very few homes on the market, and the ones that come on that are priced right and look good are gonna sell quickly. So again, you as a buyer, you have to be ready. You gotta be pre-approved. If you're paying cash for the house, have your proof of funds ready. Whether it's your checking account, retirement account, have those statements, handy so you can provide that to your agent so they can show that to the listing agent. It's all about being prepared in this market, because right now with a limited supply, if interest rates do come down at the end of the year, it's going to make the market even worse because more buyers are going to come back into the marketplace. They're already bidding up houses. It's going to happen all over again. So the homes that you're seeing today are going to be more expensive in the future. So you have to start planning ahead. And if this makes you uneasy, you better be working on your credit, saving up money, and getting your finances in place, because there may be an opportunity ahead, but you have to be ready for that time. If you're sitting on your hands, hoping things to get better, the thing I want you to ask yourself is, what if the market doesn't get better? What if this is the new normal? 7.5% interest rates is the new normal. The median home price of a house, what if it's $400,000? What if it's $450,000? Can you afford that? If you can't, what do you need to do in your powers to be able to qualify for that in the future? Is it saving up more money? Is it maybe picking up a side hustle? Is it paying off some bad debt that maybe you're still carrying? These are some of the things that you could easily do that you can control, so that way you can be a buyer in the future. You can't control home prices, you can't control interest rates. You have to deal with them with the way that they are. Whether rates go to 5% or rates go to 9%, they are what they are. But you need to take control of your finances so that way you can maneuver whichever way the market goes. You can take advantage of the opportunities that will be there, because no matter what, in every single market that I've seen in the last 15 years, whether it was the crash in 2008, whether it was the housing boom during COVID, there were winners and there are losers. Even today, clients are winning deals and getting into homes, buying their first home, and there are also people that are sitting on the sidelines doing absolutely nothing, hoping and praying and wishing that the market goes back to what it was 10 years ago. But here's a reality check. That's not going to happen. The market's not going to crash. Unless there's a massive amount of homes that hit the market, I can't see values receding at this point. Interest rates come down, values are going to go right back up, and this market's going to pick up all over again. So make sure you're doing what you can in your powers to get yourself into the right position. And if you don't know where to start, message me. My information's below. I'd be happy to hop on a call with you and come up with a game plan so that way you can be a buyer and make the most of the market.